Hello guys, glad to have you on board again. Today we'll make a first intraday video today, so we're going to try making an introduction out of here. Of course I'm open to any comments you have, things you might want to improve, things you might want to delete. So I'm doing this for you guys once again. I don't really, I already know all of what I'm sharing to you guys, so it's not for my personal purpose only. So if you have suggestions, don't hesitate to share them on the comment sections of those videos. So let's get it started. First, we're going to do a quick introduction out of what may be impacting the swing scenarios, if things are triggering, things are invalidating, or anything like that. We're going to cover this up right away. So on a quick view, I can see AUDNZD is moving quite accordingly to the scenario as well for gold and silver, and the rest is not moving at all. So we'll also cover quickly but steadily the cryptocurrencies. I see the Ripple is rebounding this morning, but not necessarily dragging up the Bitcoins and Ethereums. Ethereums are slightly dragging higher, slowly but steadily going higher after that exit pattern in here. We're in daily charts, so it's suggesting in here we've got high probability of the market to break up resistances, and I still remain on this. So of course, before we get any further in here, I just made something really odd, and I already know lots of you guys will ask me that question, so I rather like take it straightforward. I've been doubling down. It's just this is added both beta sine wave and standard sine wave out here for just backtesting reasons. But basically, once again, just pick one version. You should know that the beta version is a little bit more aggressive than the standard version. I strongly not recommend you to use the two of them in a single chart because it will significantly rise the number of available signals, which means increasing the underlying risks, because more signals means more false signals as well. Obviously, you're going to have more trade opportunities, but as most of you guys are beginning to learn my strategy, limiting the risks should be your main focus. You shouldn't be focusing on getting as many trades as possible, but most likely having the best trades as possible. So please don't use that. Just pick either beta sine wave or standard sine wave. Don't try to put the two of them in a single chart. It would be, if you're experienced enough for the strategy right now, if you've been practicing it for 6 months at least, and you feel comfortable with it, and you can try it out by doubling the signaling using the two versions of the indicator. We basically have a totally different psychology. And the sine wave standard version will pretty much be better on markets that are trappy, less signals but more quality signals, as the beta version will give more signals but more traps. And when you combine those two, it's even worse because you're going to have many signals. But you can see generally they will just get themselves accordingly as giving two bearish signals, but just not necessarily at the same level of trigger. Because many of those conditions have changed between the two versions, the beta and the standard. So anyway, it's no big deal, okay, but I know you guys will ask the question, so this is the answer. I'm just testing a few things right now. This is the reason why you've got those two versions on the charts, and please don't do it if you don't have at least 6 months of practicing using those indicators. If you're starting right away, don't make it overcomplicated. Stick to simple. It's what you should really get yourself focused on to. So Ethereum's giving everything suggesting we should go higher. We've been compressing the momentum. We're still into the squeezing momentum, which is problematic at that point because we still haven't broken a resistance. And I would like this to happen. And until it hasn't, we need to remain speculative, which means if it goes wrong, you take a stop loss. And that's how it is if you've been taking speculative entries out there. Regarding Ripple, we're finally reactivating. We're out of a bullish versus potential taking profit. The indicators are giving different signals out there. So we'll see about that. And as I said, this one might be a little bit too early to trigger, but that's how it is. One of the two indicators is more sensitive than the other. So in here, both have been triggering the bullish breakups. Both have been detecting the bullish cycle, and here's just one of those two has been triggering the taking profit pattern out there. So we'll see how it goes. I think that anyway, that taking profit pattern shouldn't be triggered, shouldn't be traded for a simple reason, because you know what the step 2 of the strategy is, and it comes first of step 3, which is reading the actual signals. You cannot trade when you're below 50% of the trend channel. Okay, meaning I'm using this right now as a trend channel because it's automatically done and it really saves me some time for the analysis. So this taking profit is nothing you can trade because 50% of the trend channel is in here, and that signal, bearish signal, is far below the 50%, which is a non-tradable signal. Meaning that we're reaching out to the potential target of that cycle, and in here we're approximately at 50%. So it's nothing close to a timing to go into buying and FOMO trading in here, most likely securing and locking the gains if you've been buying those lows, meaning you rise the stop loss, and that's all I would suggest you to do. So if you've been buying those lows, all I would say right now is that you can put yourself a stop loss, probably a safe stop loss. In here, probably you won't be taken down. In here, I would say a little bit risky, but for those who want to make it, I think that's rational enough, as we're breaking bearish signals with a bullish signal by the 2 indicators in here, suggesting we've got strong bullish signal in here. So I would say that in that perspective, if you've been buying those cryptos, especially Ripple, I say right now stopping, rising the stop in here is possible in a short-term perspective, meaning that if you're seeking for higher resistances, this is where you want to lock on the gains, probably near those areas. And if the prices are going there, then this is where you trigger the profit taking, and then you remove the stop loss. Okay, stop loss is just for the rising part of it, just to make sure you get yourself into safe areas and don't take too much risks. But I would suggest staying in here is where you have fewer odds to be chased down. So waiting for further information, because as so far all the cryptos are acting not together, which is new, and that's fine. That's funny actually, because so many people were messaging me lately, just basically telling me if this thing goes up, obviously Bitcoin will go up, or obviously, and I always been clear and answered that thing. Anytime you had those comments, I basically said, I don't believe that this correlation still remains active. I still think that things will now be a little bit more tricky, and that basically it will be harder than ever to forecast the correlation. Is it going to be positive, negative? And what you're seeing today is obviously showing this. The crypto market isn't moving together right now. We have independent signals, independent things. The overall thing will make that when one goes up, everybody goes up, but with far different amplitudes, which means the correlation is there. They're all moving up when one is moving up, but they're moving with really different amplitudes. You cannot compare something that moves 9% a day with something that just moved 0.20%. So yes, it's positive. Prices are rising in every cryptocurrencies right now, or most of those major currencies. But the problem is, some are just barely not moving when some are taking more than 9%. And this really says that they now have a different future. They have independent scenarios, and you need to trade them differently. All right? So I'd suggest right now waiting to see how far those bullish cycles can drive us, if they can lead us to the resistances, and if they do, simply by someday one is pushing, on the other day another one, the day after it's another one, and another one, and another one, but the entire sector is rising, then that's good. It will just lead us to resistances, and I would pretty much like to have, I would say, uncorrelated starting move, meaning building the momentum step by step into different cryptos to get a final step together is what I would like to see. A final step in which every crypto is rising with significant amount of percentages. I would say something like a 10 to 20% move for everyone, and then this will be a profit-taking signal to me, saying that, okay, we've got it, we took it all, now we're secure, we locked the gains, and we'll let the price to make pullbacks in order to reinforce eventually in the future. But the problem is in here is that we're no longer doing short-term trades. I've been clear in that. We're trading now longer-term time frame signals that would take probably days and weeks to plot. So once that movement will play its game, it will be necessary to trigger the profit taking, partial profit taking, and to let the market digest this for probably a couple months. So you need to be aware that the trading signals and scenarios right now in crypto will take far longer than what they did before. We're going to extend the timing just because of the desert crossing phase, and that's what it was about to be. And now that we have it, you shouldn't be surprised. All right, that aside, so AUDNZD has been moving. We said that. Okay, bullish engulfing is great, but problems we're still far into that range. We're still early ranging in here, so I would say, okay, wait for a triangle to build. If that's apparently what the market wants to make, and the triangle is far from being mature in here. So I would say regarding what we have in front of us, it will be A, B, C, making about to make a D point. God damn it! What? Oh, okay. I made it wrong myself. So it will be A, 2 ways to the downside. Okay, 2 ways to the upside. All right, 2 ways to the downside. Okay, 2 ways to the upside to make a D point, generally reaching out to the trend line from point origin to point B, and then we'll have a final E point before eventually being mature enough to play a breakout with low risk. I would say any breakout happening in between is probably going to be a range breakout. All right. So that being said, I would say, okay, now wait for it, just let it go, and see how far this can lead us, and hopefully having a bullish reaction out of this will be great. If it isn't, it means that the triangle is not on that side, and that's not good. That will basically say that the triangle is in here, A, B, C, D, E point, and if we break down, then we'll have to make lower lows. All right, so if this is what's about to come, then don't be surprised, we can make it. That's possible. I wouldn't like to see this happening, but if it does, we'll have to manage the risk accordingly. So it's still not a won battle. The market is compressing, and hopefully we will release by the upside. And if that's the case, then this is where we'll trigger the maximum leverage in here. So waiting for new informations out there. Gold and silver are heading back to resistances, but I don't see them mature enough to make the breakups. So I would suggest remaining cautious in here. We might try to go slightly higher to make a higher high on a weekly perspective, but that's probably all we can do. I don't see us accelerating out of those trend channels so far. So I would expect some future pullbacks to occur. So I'm watching closely, but because obviously we got the midterms tonight, so we can have some really strong move and unexpected things. But if things remain in the major scenarios and we don't go into unexpected things, I suggest the gold might be rising, eventually breaking the resistance, but I don't expect it to surge straight line to 50%. That's a possibility, but to me the least probable. Okay, so I'm not going to make predictions ahead of midterms. I'm no stupid. All right. So indices, I'm not trading just because of that same reason. Way too dangerous to get into that business ahead of that big catalyst. So going straight to intraday trades, we're going to basically show you how to eventually apply the strategy on an intraday basis. So we're going to do the exact same thing. There will be just a few slightly difference between applying this to swing trades to hour and daily chart time frames, and to switch it to 2 minutes and 15 minutes that we'll be applying it to intraday time frame. So difference is basically the context that will slightly change, because in a long-term scenario or midterm or swing trading, call it however you want, the thing is that you're going to have to use and take care of fundamentals, of macroeconomic projections, because on those time frames they will have some complicated but still unforgettable implications. So you have to take care of this. Make a tiny bit of macroeconomic projections, and make sure that you're not trading against a major catalyst. So you need to take that in consideration when you do trade swing. When you do intraday, you don't give a shit about that. Meaning that macroeconomic projections, fuck it, you don't give a shit. All you care about is short-term catalysts. So obviously, it's easier because you don't have to really understand economy to trade on an intraday basis. You're basically going to trade overbought, oversold conditions and trying to get yourself into safe areas to trade and not taking risks to get a reward. And once again, making reward is kind of easy in the market. It's not risking too much to get that reward. That is the actual trading job. And the part that most people just don't really get. They all focusing on easy gains, and generally when it comes down to easy gains, it's generally that you're taking heavy amounts of risk that you're just not aware of until they manage to show up and fucking ruin you. All right, so limiting the risk is the goal on intraday basis, and the additional risk will be the economic calendar, because on a day-to-day basis, you've got lots of things that will be released minute by minute, and the problem is that those things may impact the market in short term. So not the big picture is going to impact, unless you've got strong trends. Most of the time on an intraday basis, you're going to trade ranges. And the market will oscillate, and the problem is that those short-term catalysts may help to push the prices inside the ranges, which is one reason when you do trade intraday, you obviously want to trade context. In context, you want to trade boundaries to make sure that just a big catalyst, either one that is going to miss the consensus or strongly surprise the market, is going to break through those context boundaries. What I call context boundaries is basically those trend channels, the big channels I have on those charts in here. It's an indicator I'm going to give you guys, sure thing, and just thinking about the way I'll do it, combining it to sine wave, or letting it in a single indicator for you to add or not. So we'll see about that. It's just there are multiple things to take in consideration in here, and still haven't made myself a choice. So don't worry, it will be released pretty soon. It's just I want to do it right, and I need to take a stand and and make a decision, which I still haven't done because there are many things to in consideration in here. It's not simply just releasing, because the problem is when you release something into trading, you just can't unwind this thing. When it's released, you cannot delete it afterwards. So I need to make a choice, either standalone indicator or I combine. But the thing is that standalone version will force you to make a choice between the oscillator of sine wave and this, and I don't want you to make that choice. So I'm searching for smart in-between solutions. Okay, so still trying to figure this out. Don't worry, it will come out someday. So anyway, you can still do those things. You just build yourself the trend channels. You know that those trend channels in here are trying to emulate what you could be doing manually, which is that trend channel in here. So you take the market top, and as you can see, it's showing the exact same price area as my long-term trend channel. So you can do the job manually, and obviously, generally, manual job is going to be better done than the automatic job. Most of the time, they will be the same, but on some cases, they won't. Okay, so for example, in here, this is where you go. All right. So don't worry if you don't have the indicator. You can do it yourself. It's no big deal. All right. So as you are trading the long-term context, the big picture context, in here is where you can make intraday trades. So we're 2 hour chart time frames. So first of all, we're going to switch because that's not how we're going. So we've got multiple options when it goes to intraday. Different styles. So you're going to pick the style that fits you. I'm going to show you what the options are. So first option, you trade just one asset. You stick to this one, you're not changing, okay? It means that you pick a side, you pick a choice, you like one asset. Generally, I'd suggest you to use stock indices, the best. So French users are really big fans of the German index to trade. I know the US traders generally liking to trade the Dow Jones on an intraday basis or the SPX. So we're going to take the Dow Jones and see how it goes, okay? So intraday basis, meaning that we don't really give a shit about the 2 hour chart. We're going to start building ourselves a context in 15 minutes. Okay? First reading, really easy, what the latest signals are. And for now, we can see that it was a double taking profit pattern triggered right this morning at 8 a.m. Okay? So this is probably the trade we would have taken in that thing, okay? Simply because in the 15-minute chart time frame, we were trading the context, the resistant context. So we're searching for selling entries out there only, okay? So this signal this morning at 8 a.m. on my local time frame wasn't yet plotted on the chart, so I still didn't know about this one, all right? I'm going to double the charts and going to use this one in a 2-minute chart, all right? And we're going to review what's been plotted this morning on the chart. So starting at 8 a.m., we were just right in here, okay? The market was rising, bullish cycle, and squeezing momentum. So no double signal, kind of a big mess ahead. Okay, we're starting the day, we'll go right inside the context, so right inside the 15-minute chart time frame thing. We see that we already have overbought condition in 15 minutes in here, and we're just waiting for a 2-minute signal to confirm that. We need a signal in here. And so far we have nothing, which means in here you can't trade. You just can't trigger the trades. You can't catch the top. It's too risky. The market could have just kept on rising in here because you had neither momentum or a sine wave heading to the bear side. So you just wait for something to confirm. Right in here, your oversold conditions on the bottom, so on the support channel, and you're still in the bullish cycle. This is what we call a double bullish. So when you go in here, you wait for the market to rebound and to break that down. If it breaks it down, then you're good. It means you can trade bearish. You know you have to trade bearish. It is not bullish and bearish. You're going to trade bearish in here. It's an option. That's no options. Now, you need to decide what will trigger that trade. It's step 3, okay? You need to make sure that the market has tested the context, which it did, and then the market is trying to build a support. If that support breaks down, that's a breakout trade, which means this morning you didn't have anything but a breakout trade right in here at that candle close. When the market rebounds of the support, goes back to it and make a candle close below it. When you've done that, closing that candle is a selling breakout entry, which means when you do this, there is an associated stop loss, okay? And that you generally will target a 1-to-1 ratio. You've got the breakout pattern confirming this right after perfectly. So this is where you're going to put your first taking profit, okay? In that area, this is where you want to lock on the gains, okay? You've got a taking profit pattern triggering right here. So this is exactly where you should have triggered your profit taking, okay? In here, you take the profits on a 1-to-1 ratio and you pay for your stop loss, okay? So right in here, you just take 50% profit, pay for the stop loss and do nothing. You let go with the trade. See if the trend's playing itself or not. Then you wait, okay? So I'm going to use the replay because I don't like to see what's been happening before it does. Now we know, but the thing is that this is how you should have played it, okay? Move it bar by bar. We know that if we goes in here, you put the limit, okay? It means that you have a limit trade in here, and we go forward, okay? Oh gosh, taking profit pattern. So this is what I said, okay? When you've got that candle closing, I would say if you don't take the profits in here, you needed to take it right here because now you had bullish momentum. You're reaching out the target. You can wait a few more candles if you want to, but right in here, I would say, okay, now you need to get the fuck out. You need to take 50% profit, lock on the gains to pay for stop loss because if the market is reversing brutally, then you just don't want to lose money. You just want to make sure you win something. Okay, so that's how you should have played this. Right here, obviously, a profit taking should have been triggered, and now you wait. You plot more bars. You need for further information. Okay. Sine waves now reversing bearish, but still no momentum confirmation. Okay, momentum confirmation got right in here. Okay, on that candle. So bearish momentum confirmation in here. You can trade bearish as well, so you can reinforce the position. Okay. This one is a market order. All right. You secured 50% of the gain. You're putting them back in the market. You're not rising the leverage. This is not how we do. You're just putting that money back in the game. You can put a tiny amount of money, tiny additional amount of money, but you don't want to double the leverage of the initial sizing position, okay? You still want to maintain the same level of risk. As you're buying in here, as I said, either you let the stop loss in here and you just resell what you've been buying in here, but this time you've got a free stop loss. Second option, you lower the stop loss, but it has to be above this trend channel, okay? And you can add some money to the position sizing and rise interest. You are basically gonna take a little bit more risk, but obviously you're gonna take more gains if it plays through. Okay. Goal in here is obviously to go below the trend channel, below the target to install a bearish trend and make sure that the bears are in control. Move on slowly but steady. No new informations. Okay, down job. We wait. Still nothing to do in here. Nothing to do. All right, there you go. Taking profit pattern. We just wait for a momentum confirmation. Oh shit, something happened. All right, so obviously something just happened right now. Right on that thing, probably a market catalyst showed up. So that thing is that right in here, you should have, you go out because the market is brutally reversing. So I would say right in here, you just get the fuck out of here. You had the profit taking early signal, but the market decided to brutally, something may have been released in here, or anyway, we're just ahead of midterm. So today is going to be a different story. It's going to be aggressive. So anyway, right in here, you just get the fuck out and you take your nice gain, and that's it. Okay, so as you can see, market reversed and got the taking profit right after. Okay, so right in here, anyway, in that market, you should have got the fuck out. All right, so nice gain. Started right from here and here, taking a gain. So it makes you an average price of this for the profit taking for 25% gain. It's great. And it was just following the market, pure and simply. Now you know that the bears are in control. So I would expect the price to go lower than that. But facing the uncertainty of that day, I would have taken my profit personally in here. Obviously, I wasn't trading at that time, so I didn't take those trades. But I was making the French shows right in live, and it basically highlighted the same trades when those prices weren't yet plotted on the chart. So just to set things straight, I hate to comment something that has already happened, but just to set things really, really transparently in here, I made the exact same comments, commenting on the French, God damn it, on the French podcast, and it was real time back then. So I'm not making yesterday's weather forecast. It's not how it works. I hate that. So, okay, all right, I'm just going to remove the drawing tools just to have a clean chart. But this is how you would have played when you're playing a single asset. Now, I'm going to show you a different way to trade. A way I do like. I know how to make those too, so not a problem. You just basically pick the one you're most comfortable with. Second option is to use multi-chart functions, or to basically scroll your charts one to one. And I give you a tip. Basically, when you're on a single chart in here, okay, if you press pace, the space bar, it's gonna be scrolling to the next one into your watch list. See, for this with XPX, NASDAQ, GPN. So you can scroll through things pretty easily. So you put yourself a list. It has to be major stock index. Major currency pairs. You just trade major things that have a lots of liquidity on the intraday basis, because that's what's needed. So you don't get to trade AUDNZD, for example, which is an exotic pair that you don't want to get into your watch list for the intraday trades. Okay, basically Euro yen is okay, but it's dangerous to me. I would say Euro dollar, GBP USD, Euro yen is acceptable, USD yen is okay, all the rest is too low. Trading gold is not possible, not liquid enough. Trading bonds neither. I would say yes, US indices is possible. Stocks themselves are pretty much impossible. Or you can trade the big stocks like Apple, Nvidia, things that have liquidity. Okay. So we're gonna do it. I'll do it personally in here because I think that thing is gonna explain you what this is about pretty easily and easier. So the thing is that I'm gonna. use the magnifying glass as well again. So I'm going to switch it to that area. So the thing is that you want to have a look at multiple charts just to highlight which one is the most interesting. And to do this, it's pretty easy. I do use the indicator right away in here to save me some time. So you're going to make sure that you do the analysis yourself. You're just going to have to follow 8 charts. It's not that big of a deal. So you have to build the trend channels yourself, the big trend channels, and making sure you're trading at those boundaries to highlight who is going to be interesting. As for example, in here, all I want to is to trade those who are trading the big channels in the background. So as for example today, and to set things really transparent in here, I was doing the exact same thing with the French users this morning in a live recording session. Sorry, not live, but basically when I recorded, the market was still up here and up here in the USD JPY and GBP USD, and basically I said those two are interesting today because we're trading resistant context in here, resistant context in a USD JPY as well. And I said these two are the ones I would trade on an intraday basis using that strategy, because you don't want to trade everything. You're not trading the asset you like. You're trying to trade what's offering the best opportunities today. What we're looking forward for in an intraday basis is just liquidity, is prices that matters, because we want to trade what others trade, but we just want to trade risk-reward ratios. Okay, so we're going to get into the intraday knowing that we've got better odds in here to have a bull and bears battle in that asset than we will in this one, because right in here we're in the bearish context, gives us a side, gives us an edge. So we're going to trade bearish because we should have more bearish demand in here than the bullish demand, but doesn't necessarily mean that we're going to break through supports. It just means that we might have some supports pullbacks, and these are the pullbacks we're trying to make and take advantages of. Okay, so for example today the trade application was basically selling GBP USD in here, selling USD yen to take the profits on the lower boundaries, so on the lower trend channel, and that's exactly what the market has done this morning. It's been selling, getting to the targets right instantly. Right, and now we even have a bearish breakdown in here, which is interesting. It believes that, for example, GBP USD can drive us down to fewer levels and eventually try to break down that channel as well. So these are the two ways you can apply the strategy. The rules will remain the same. You just don't take a fucking trade if you don't have double bullish or double bearish. You need to have the indicators showing confirmation, which means you need to be on a price or a target or having a triangle and having momentum saying bear okay or bull okay. All right? When you have that, you take the trade, you put a stop loss further away. No tiny stop loss when you do intraday trades. You see the target you want the price to reach to, and you put a stop loss of that exact amount. You risk 1-to-1 ratio on an intraday basis. All right, you're gonna have probably 75% winning trades, approximately. So of course, the more experienced you will be, the better those numbers will be. And at the beginning, you will probably not be that good. So don't blame yourself. That's normal. You gotta have to practice. So rule number 1, if you start practicing those scenarios, you use the minimum available leverage. If your broker can offer you micro lots or anything like that, you use those micro lots to the minimum amount possible to trade, because when you try something new, you'll obviously make mistakes. And this is not the strategy's problem. It's just that you're lacking of confidence, you're lacking of trading application. And obviously this will improve through time, and you just want to make sure that before the numbers are satisfying enough for you to make sustainable gains, you just don't want to use any kind of leverage or position sizing higher than the minimum you could use, because you're not going to get statistically positive return at the beginning. You're going to have to work your way into that area, and obviously that means that you may experience bigger losses than the gains at the beginning. And regarding this, you just don't want to multiply those losses. Okay, you just want to multiply the gains. So make sure you get into reliable gains before getting into adding position sizings. All right, we'll also do, as I said, on Wednesday, we're going to make those those new shows we've been talking about yesterday is that we're going to make trade application reviews tomorrow. We're going to make educational content, which means if you get yourself into trying that strategy and come across problems, which means if you take a stop loss and you don't know why, and you wonder why you've done, if you made something wrong, just remember something. You take a screenshot, okay? You take a screenshot and you use those tools, the text tools. Okay, for example, I would like to have double chart if you have the option. So if you have a pro account on TradingView and you can do that, just make sure you have context on the left and your local chart on the right, or the opposite. I don't really care. It's just that I'd like you to write down what kind of context you were trading. So you basically say context, range, bearish, or whatever this is. You just tell me what range, what context you've been identifying to trigger the trades, what signal and what technical framework. So step 1, context. Step 2, what technical framework you've been using. You can use whatever you want, the trend channels, the Ichimoku, or whatever. Really use whatever you want. You just tell me what you've been using to go to the conclusion that you were trading interesting prices. And finally, what's the signal you've been using. If you can put me those 3 things in a chart, I will basically tell you if you've done something wrong or not. So you should know that this is by making mistake that you get yourself better at anything. It works not just for trading, but really for everything. If you're trying to ride a bike, you're obviously going to fall at some point, and it's going to teach you how to get to learn balance. And okay, that's how it goes. Same thing for trading. When you fall, it's an opportunity to learn something. So this is what we're going to do, those shows on Wednesday, what this will be about. So we're going to use Discord for this. So it's basically get yourself into Discord, and you're going to enter pro indicator support, and you got strategy question topic. You're going to get yourself in there, and you're going to ask, you're going to post your charts with your context and things like that. And if you want them to be reviewed, then we'll do it each and every Wednesday, among other specific subjects, and that we'll do from time to time. If we want to make a special focus on psychology this day, we're going to do a specially psychological day. But I think just probably 1 out of 2 weeks, we're going to make this just practical example of what you've been doing, how you can get yourself into getting better. So it's not going to be just, okay, you just done it all wrong and you're bad. No, it's just there's always some good and bad. So we're going to balance. We're going to see the pros and cons of how you apply the strategy, how you can get better at this. And this is how I want to make this thing more like sharing, not just being there to tell you how you've been doing wrong and how I'm doing perfect, because this is not how it works. I myself, I'm making mistakes from time to time. The question is, if you blame yourself for every time you take a stop loss, that's not how it works. Some stop loss will be normal to take because you simply apply the strategy and the market went otherwise. That will happen. And from time to time, you just make mistakes and you have to learn something from them just to avoid making them again. Anyway, that being said, I'm going to take the few questions you left today in here, and then we're going to switch to something else. Oh, sorry. First of all, and we forgot about this. Okay, intraday things means that you have to have a look at the economic calendar, because when something will show up, you really want to make sure that the market is not going to publish something in 2 minutes from your trade entry, because if that's the case, then wait for this to show up and take the trade right after, but not before. It's going to be impacting the market, not those those tiny things. But let's say 2 bulls in here might be having some short-term impact on the intraday trades. Okay, especially those who matters. For example, if you're trading GBP/USD, you must be aware that this one will probably have tiny, but maybe impacting. But the GBP number will obviously have no impact if you're trading the German index or the SPX. SPX doesn't give a shit about GBP gilts emissions. Okay, so it's bond emission on 10 years. So anyway, comments, questions. Thank you for this, Thomas. Midterms elections, yes, obviously I know. I forget about telling this, but I know obviously about that. Yes, we can. Obviously, anyway, we were going to make technical reviews first. But for getting into the educational content, if anything moves just like we've done today, meaning we do intraday focus, but we'll also review if something moves into the swing scenario. So I bet something will move into the swing scenarios by tomorrow morning. So obviously we're going to have to make a swing review tomorrow, but the focus of the show will mostly be about what we said, helping you to get better at applying the strategy and taking real examples of trades you've been taking to see how you've been doing with them. Will be great to get to a new video about how to identify markets in range. Yes, okay, so markets in range is the easiest way. I'm not going to make a specific educational content just for this because it's really, really easy. Okay, so how do you identify a range? We're going to take a ranging market. We're going to take, let me see who's ranging. Yeah, AUDNZD is definitely ranging. Alright, this is range market. To me, it's obvious. So yes, I bet this is not going to be obvious to everyone. So let me just show you how this is. And range market is a market that will necessarily, in most of those cases, you'll see that the waves, the impulsive waves, are generally retraced. Okay, which means you can see an impulsion in here, an impulse. The market retraces generally at least 61% and generally even more than that. It's a suggestion that the market doesn't really know where to go. It fails to break the highs, and anytime it breaks some highs, it retraces right after. A sign of trend is a market that is, for example, in here could have been possibly set as a range possibility. And even though, as you can see, the market is breaking that resistance, isn't pullbacking, is accelerating, is trying to break, and in the time it gets to the next resistance, it stops right away in reverse. Really signs of a ranging market. Lots of breaks, and none of those breaks is triggering a trend. Anytime we try to install a trend in here, failed to break the major support. So it's just said that anytime the market will manage its way to the major supports and major resistances, it won't go higher than that. See, back then we broke the high and the market's swinging a lot. Okay, you see those swings. It shows signs of hesitation. And when the market is hesitating, it generally means it's ranging. Doesn't mean the range is neutral, because you're going to have neutral bullish, neutral bearish range. But you also have neutral, when you basically have absolutely no clue if the market may extract from that range bullish or bearish. You just don't know. So when you're there, I suggest generally you just don't trade. When you have a neutral range and you have absolutely no clue about what the balance says, about the odds to go higher or lower afterwards, if you have absolutely no odds, then just switch to other assets. Okay? Because so many assets to trade, so don't bother yourself obviously trading just one asset because it has to be that asset. Okay? And thank you, Michael, for time-stamping this. So I see you guys tomorrow. So remember that for those who are in the Discord, if you took some trades you might want to review, then first of all, it works just well if you take a trade that you've been taking a gain out of, and don't be ashamed sharing trades you took losses out of, because that's not how it goes. If you're afraid of losses, you'll be a terrible trader. It's not how it goes. Okay, trading, it means accepting losses, that they're a part of the game. You need to embrace losing, basically, because the more you lose at the beginning, the faster you'll learn. And manage how to overcome those losses in the future, not making the same mistakes, getting better and better and better. So instead of blaming yourself when you get a strong, when you get a strong trade, that's good, that's perfect. You have to rise your self-confidence of this. When you make a good trade, get to build your self-confidence. When you take a bad trade, it shouldn't ruin it all. That's the problem. When you're learning generally, when you take a good trade, you're slowly but steadily rising the confidence you have in your trading. But anytime you get a loss, you just ruin it all. Just like, okay, I thought I had it, but I actually don't. No, that's not how it goes. When you make a mistake, you just have to learn something, just not ruin the confidence you had in you. Just quite the opposite. It's just, it's one way to get better. And the only way to get better when you when you take a loss that is having impact on you is to share with that loss, to learn if you actually did something wrong or not. And there's always something to learn from a loss. So please don't be shy. Nobody's going to judge you out there. We just got two options, okay? Either I'll tell you that you just done your job and it's going to work just fine, so you gain confidence, because I'll tell you that you've done the job, that you got the point and you just done what you have to do. Second option, I'll just help you getting better. So it's just rising confidence or getting better. I don't see anything bad in there, so I don't see why you should be ashamed. So, all right, you took a loss, share it with me. So, bye guys, and see you tomorrow. I hope you'll be there to participate with that, and see you tomorrow.